Phần lớn quá trình xây dựng một phần mềm tẻ nhạt thực ra là những gì xảy ra sau khi bạn viết mã. Kiểm tra mã đó để đảm bảo mã sẽ hoạt động cho người dùng của bạn, sau đó thực sự đưa mã đó ra thị trường và giám sát mã đó để đảm bảo mã hoạt động tốt, đó là một phần của quy trình. Vì vậy, khi đề cập đến DevOps, có 3 phần chúng ta cần hiểu. Có kỳ hoặc tích hợp liên tục, kiểm tra mã của bạn thường xuyên, CD hoặc triển khai liên tục, triển khai mã của bạn thường xuyên, giám sát hiệu suất ứng dụng, theo dõi hiệu suất ứng dụng của bạn. Vì vậy, hãy tưởng tượng bạn được giao nhiệm vụ viết một tính năng mới, bạn đã hoàn thành xuất sắc công việc, bạn đã mã hóa nó và bây giờ thì sao? Thực sự là còn lại 2 thứ. Bạn cần hợp nhất mã đó vào phần còn lại của cơ sở mã, bao gồm cả việc kiểm tra kỹ mã đó trên một số chiều, đảm bảo bạn không vi phạm bất kỳ điều gì. Thứ hai, bạn cần đẩy cơ sở mã đã cập nhật đó. Cuối cùng, khi nó được đưa ra thị trường, bạn cần đảm bảo rằng nó hoạt động tốt. Một lần nữa, đây là một phần key, CD, APM của nó. Về cơ bản đây là DevOps. Và hãy để tôi đặt cái này ra.
And what we don't want to have, Kelly, is neighborhoods and housing price competing with big tech and data centers, because I'm just going to tell you, you as a homeowner are not going to outbid Amazon, Microsoft, Google, Amazon, or others.
Right, but I take
Amazon twice. You get my point.
I take his point, though, that you kind of want the people with the deepest pockets to foot the bill of getting this stuff unmothballed and back online. And if they can do that and really get a ton of capital and a ton of momentum behind nuclear, look, the households, to your point, don't have enough purchasing power and wherewithal to really galvanize that movement. So I hope he's right that they'll start and then maybe we'll get it more broadly and more cheaply. But of course, if we hit any snags along that process is where we should expect some conflict.
It's been a huge anti-nuclear focus in the United States. 3 Mile Island, Fukushima, I get it. There's a lot of worries. These reactors are not Chernobyl. They're not built like that anymore, the way they're constructed. I'm not saying they're risk-free, but the risk is lower, especially if and when, and small modular reactors are not a thing yet. We hear a lot about them, Kelly. It's like, I hear a lot about this high-speed train from D.C. to New York that's going to bring me home in an hour. We're not quite there yet. I'll be on the Amtrak. It chugs along at, 65 miles an hour. But down the road, we might have, the maglev or the Shinkansen here.
Yeah,
we'll see.
You're in the car, if I'm not mistaken.
I took the train.
Did you? Oh.
It was icy yesterday, and I just was too lazy to drive. Yeah, it's a lot of this.
Yeah. Anyway. I always get there, I get up to go to the restroom right when we hit a corner. Whoa, across the train I go.
Exactly. I'm sorry, I'm going to apologize to people I fall into already.
Especially, you and I are our center of gravity. We don't cope well. Brian, it was an excellent interview. Thank you for bringing that to us. Brian Sullivan interviewing the new Secretary of Energy, Chris Wright. Further ahead, sports owners getting hit with the potential penalty if the president ends a key tax break. We do have those details further ahead.
Sử dụng Google DevOps. Khi bạn nói chuyện với mọi người về DevOps, có rất nhiều cách hiểu khác nhau về DevOps là gì. Một số người nói đó là một triết lý, một số người nói đó là một chuỗi các công cụ, một quá trình. Nhưng đối với video này, chúng tôi thực sự đang nói về DevOps và cách nó liên quan đến quy trình làm việc và công cụ. Đó là lý do tại sao chúng tôi nghĩ GitLab là một công cụ tuyệt vời cho bất kỳ thứ gì liên quan đến DevOps. Bây giờ, tùy thuộc vào nơi bạn làm việc, giả sử đối với việc theo dõi sự cố, nơi chúng tôi theo dõi lỗi và yêu cầu của mình, bạn có thể sử dụng Jira. Thứ hai, Asana. Để kiểm soát nguồn, bạn có thể đăng lưu trữ mã của mình. Vì vậy, bạn có thể sử dụng GitHub, bạn có thể sử dụng Bytebook, bạn có thể sử dụng GitLab, bạn có thể sử dụng thứ gì đó khác. Đối với Key, CD, kiểm tra và khám phá mã của bạn, thành thật mà nói có quá nhiều công cụ mang tên các bạn, nhưng có Key, Jenkins, có Hanner, có Chốt, có Argo.
And trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Dành cho tất cả những người đang truy cập. Không, hiện tại tôi không quan tâm đến việc sử dụng công cụ của bạn, nhưng để theo dõi, có những công cụ phổ biến như Datado, Grafana, New Relic, danh sách này vẫn tiếp tục mở rộng. Hầu hết các công ty sử dụng nhiều công cụ để tránh sự ràng buộc của nhà cung cấp. GitLab nhận định rằng bạn nên thực hiện tất cả những điều này trên một nền tảng và hợp nhất ngăn xếp của mình. Theo ý kiến của tôi, GitLab thật tuyệt vời nếu bạn một công ty khởi nghiệp, nếu bạn là một tổ chức nhỏ hơn hoặc bạn không có nhiều bộ phận chuyển động.
The Senate has been warned to not use AI tools from the Chinese-based company DeepSeek. A memo warned Senate offices that the app's terms of service and the company's servers are located outside the U.S. and are outside of the purview of U.S. law. It comes as a bipartisan group of House lawmakers introduced a bill this week to ban all government workers from using DeepSeek. We are seeing one of the worst flu seasons in more than a decade. That's according to the measure of doctor's visits driven by flu-like symptoms. CDC data shows the number was higher last week than it has been since the 2009-2010 flu season. At least 41 states are reporting very high levels of flu right now. And President Trump says he wants to get the nation, quote, back to plastic, at least when it comes to drinking straws. In a post on Truth Social today, he said he will issue an executive order to undo the Biden administration's push to require the federal government to ditch single-use plastics and adopt environmentally friendly paper straws. Back over to you.
We'll see if that spurs people more broadly to do the same. Angelica, thanks.
Thank you.
Let's take a look at shares of Roblox taking a turn lower this hour. Steve Kovac with the detail. And didn't they have earnings, Steve? But this is something.
This was yesterday. This is something separate going on here, Kelly. So Bloomberg just reported they got some confirmation from the SEC that Roblox is under investigation. They're not exactly saying what this investigation is about, but we do know that Hindenburg Research put out that short seller report, of which Roblox denied everything in there, that they fudged some of their gaming metric or some of their user metrics and other things that caused the short report to come out. And since the stock tanking when it did come out, since then they had that blockbuster report afterwards. But right now you just see shares down about 2% on this news that the SEC is looking into it. Again, we don't know what it is. I've reached out to Roblox or comment, have not heard back yet. Shares off about 2%.
All right, we'll keep an eye on that.
Yeah.
Meanwhile, not to say, I mean, it's a busy day on the video game front, but probably the real big headline was about Grand Theft Auto 6.
I know you're excited for this one.
You know, I'm actually interested in, I've never played the game or anything, but I know about the speculation and anticipation for this thing, which is 10 years in the making to come out in the fall, and people wondering whether it really will or will be bumped back. What was the news today?
So this is huge because yesterday, Take-Two Interactive, that's the company that publishes Grand Theft Auto 6, just reiterated that it's going to launch this fall. That's not new news. We knew this was going to happen, but it was enough to send shares soaring. This is especially after the pain we've seen from other gaming companies this earnings season. Let me just give you some examples here. Electronic Arts, they revised their guidance lower in January. That's after Football Club, their soccer game franchise, and another game called Dragon Age Veilguard failed to live up to expectations. It was a really disappointing quarter. And then you look at Microsoft, their gaming revenue for that December quarter down 7%, and their gaming hardware revenue, that's the consoles, the Xbox consoles, it was down 29%. And by the way, Kelly, this all includes Activision, which has now been fully absorbed by Microsoft. It was that $69 billion acquisition that they made, all that regulatory headaches and all this kind of stuff. You got to wonder now, was that worth it? Especially as we see Microsoft just spend all this money on CapEx that makes that $69 billion acquisition look kind of cute by comparison.
I was going to say, it was one of the last big things they did before the arrival of AI.
Before everything else happened. And then in the meantime here, we got Bloomberg reporting last year that Take-Two competitors, they're just waiting for this GTA 6 solid release date before announcing their own games. This is going to really dominate the entertainment industry.
It's going to kill productivity.
It's going to kill.
People are going to spend the entire. Where's Kareem? Is Kareem in here today?
Kareem is going to buy it.
What are you going to do when GTA 6 comes out? Am I going to see you for like a week?
I'm putting in a leave of absence.
Yeah. I wanted to see Take-Two shares over the past decade or so, because my only question while they're popping today is, it's so long in between these cycles. Does it make, I mean, can you hold these shares for the long run?
And you can't, and well, here's the thing about GTA. Again, the GTA 5, the best-selling entertainment property of all time. In the meantime, it's still generating sales.
100% in 10 years.
Right.
Nothing
And
to sneeze
so even though this game is 11 and a half years old, it's still generating meaningful sales for Take-Two. It's a huge part of their business. And the expectation here is that GTA 6 is just going to knock this out of the water. Keep in mind, back in 2013, when this first came out, when GTA 5 first came out, it did $1 billion in sales its opening weekend.
Yeah.
That's going to look tiny compared to what
Absolutely.
GTA 6 is expected
Probably
to do.
bigger than any movie, anything like that that we're going to see this year. Steve, for now, thanks. Steve Kovac. Quick check on the bond market. We've seen interest rates rising after some inflationary pressure showing up in the data this morning. Rick Santelli with the latest. Rick, what can you tell us?
Well, there was a lot of warm data out this morning, that's for sure. Whether it was the unemployment rate dropping to 4%, as you see on that chart, or University of Michigan, not only the weakness in confidence, but of course, the big jump from 3.3 to 4.3. That really is a big jump on the one-year assessed future inflation. But a word of caution. There's a lot of nervousness and uncertainty that goes with these. I don't think it's a coincidence some of this information gets released on a Friday. I would take it in stride. We see what happened with Canada and Mexico and how the markets reacted, but you see a lot of red in the equity space now. You know, it's been an interesting week. We flattened the yield curve 14 basis points. Look at 2s and 10s. That's a week-to-date chart. 2-year yields are currently up 7 on the week. 10-year note yields are down 7 on the week. Very unusual. And next week, get this, not only do we have 3, 10, and 30-year auctions, those long-dated auctions, we also have CPI and PPI. It's going to be a big week. Brian, back to you.
Rick Santelli, thank you very much. All right, coming up next, a power player, Kyle Bass, is here. He will weigh in on President Trump's first couple weeks in office. You're going to want to hear what he's got to say, and you will, but only if you hang around.
Vì vậy hãy cùng tìm hiểu lý do tại sao Dịch lắp lại tuyệt. Vì vậy hãy cùng tìm hiểu lý do tại sao Dịch lắp lại tuyệt vời. Đầu tiên, chúng ta cần nói về DevOps. Hiểu Dịch lắp có nghĩa là hiểu DevOps. Phần lớn quá trình xây dựng một phần mềm tẻ nhạt thực ra là những gì xảy ra sau khi bạn viết mã. Kiểm tra mã đó để đảm bảo mã sẽ hoạt động cho người dùng của bạn, sau đó thực sự đưa mã đó ra thị trường và giám sát mã đó để đảm bảo mã hoạt động tốt, đó là một phần của quy trình. Vì vậy, khi đề cập đến DevOps, có 3 phần chúng ta cần hiểu. Có kỳ hoặc tích hợp liên tục, kiểm tra mã của bạn thường xuyên, CD hoặc triển khai liên tục, triển khai mã của bạn thường xuyên, giám sát hiệu suất ứng dụng.
All right, welcome back to Power Lunch. Certainly a busy and some would say scary time here in Washington, D.C. The president moving markets and your money with nearly every word that he utters. He wants lower interest rates, lower inflation, and lower oil prices, but higher pressure on places like Iran. And Trump also surprising many, trying to talk about changing the tax code that could actually raise taxes on some very rich people. All in all, there have been a lot of surprises, and we're only a couple of weeks in. Let's talk about all of this with Kyle Bass, founder and CIO of Heyman Capital Management. Kyle, good to see you. What to you has been the most surprising thing of this new administration or renewed administration so far?
I mean, The thing that's the most exciting, I think, to many business people and to the people of our country is the Doge team going through the various agencies and cutting the fat, taking some of the ridiculous expenditures out of government's budgets. And I think that with our government spending $6.1 trillion last year and set to spend more this year, I think Musk's targets of trying to save $1 trillion would be phenomenal if he could hit those. So that's the most that's the largest change in anything I've ever seen in an administration, and I'm very excited about the results of the Doge team.
Well, it's very scary to a lot of people here, I will say that. And by the way, if you haven't seen our interview, not you, but our audience with the Secretary of Energy, my first couple of questions were about that. And Chris Wright basically said, yeah, these are people that we have vetted. They've got badges. They're going through, just trying to find waste. There's a lot of still confusion, but I urge everyone to kind of go see that. Outside of that, and I know it's not getting a lot of attention with all the domestic stuff, but you had President Trump issue a pretty big statement about Iran. Obviously, I'm talking to the Energy Secretary. Iran's a big part of that. I mean, it sounds like if there was any hope for any kind of reconciliation with Iran, that is out the window.
I mean, Brian, we had in 2017, we had Iran pinned down to about 12 to $15 billion of working capital. Iran produces 4 million barrels a day. They export 1.7 million barrels a day. And we had them sanctioned pretty hard in 2017. And what the Biden administration did by loosening Iran's ability to access capital, they went from having 15 billion of capital to 100 billion of capital. And look what happened. October 7th happened. And so I don't know if you saw the president signed a couple of days ago, he signed a presidential memorandum to apply maximum pressure to Iran. And he instructed Treasury Secretary Scott Bessent to impose maximum economic pressure on Iran to get them to comply again with their nuclear ambitions. And, I'm afraid that the war between Iran, its proxies, and Israel doesn't really have an off-ramp. And I think that, as you've seen, the hostages returning are going to slow to a trickle and maybe even stop because it's Hamas's only leverage. So now we need to go back to Iran and their nuclear ambitions, and we need to get to a JCPOA 2.0 or a deal in which they allow us full inspection of places like Natanz and their pickaxe facility where they're doing all the uranium enrichment, because we believe as a country that they're pretty close to having the ability to have a nuclear bomb.
Yeah, and your connection is the idea that Hamas and Hezbollah are largely proxies, and maybe the Houthis in Yemen of Iran. They get a lot of funding from Iran, and so the more money that Iran has, the more likely they are to fund these terrorist organizations. Do you think that President Trump then will try to effectively not bankrupt Iran, but reduce those foreign capital flows back to where they were so they simply don't have enough money to use it for bad things?
Yeah, I mean, I call it make Iran broke again. This is what has to happen, Brian, for us to be effective in neutralizing their nuclear ambitions. You think back to the Cold War in Russia. The Russians didn't wake up one day and say, you know what, Brian, you know what, United States, democracy sounds like a better idea than communism. We're just going to change our system. If you remember what happened, we, along with our Middle Eastern partners, took oil down to $10 to $11, and 60% of Russia's GDP is Urals crude, and we broke them. We can break Iran, and we can certainly break China if we're willing to use tariffs and sanctions as the tip of our spear. We are still the strongest and largest economy in the world by far, and these belligerent, malign actors around the world only understand two things. They understand violence and they understand money. And if we want to avoid violence and we want to avoid kinetic conflict, then we have to be willing to not only sanction, but secondarily sanction some of our mortal enemies. And I think that reading President Trump's national security memo, which was different than an executive order, it was broader. It basically conveyed a new policy. So I think that was a big deal.
Let me ask you this, though, and we know you've been critical on China for years. I get that. Let's put Canada and Mexico aside because those tariffs may never happen. They're on pause. Let's see. Let's talk about China. There is a fear, and I'm not endorsing it or supporting it or whatever, Kyle, but there is a fear, and you know it. And you're originally a bond guy. People don't realize that about you. But here's the thing. Is there a level at which you think that we could tariff China, but their, quote, nuclear option is actually just dumping a bunch of our treasuries, spiking interest rates, raising borrowing costs on average Americans, and sort of cracking our system? Is that, because honestly, I don't care if I buy cheap socks from China, whatever it may be, but is that a real risk from China?
It's not a risk at all. This is a Chinese propaganda narrative, Brian, that somehow you and the press have picked up on. They own 740 billion of our treasuries. We have a $30 trillion economy. If they sold their entire treasury holdings in one fell swoop, they'd move our rates about 25 basis points and it'd be over. They are inconsequential to us in the treasury market.
I love clearing that up because I think you know what I'm saying, Kyle. That narrative does exist.
I know it's the Chinese sort of Damocles that they think they can hold over our heads, and they propagate it in social media, and it's complete BS.
Well, let's not take my initials in vain, but I think it's important, Kyle, to recognize the truth of these numbers, and we're trying to clear a lot of stuff up. Kyle Bass, Heyman Capital Management, really appreciate you joining us. Kyle, have a great weekend. We'll talk to you soon.
You too. Pleasure, Brian.
All right. Coming up, we got movement in the shares of U.S. Steel. They're down 7%, and it may have something big to do with the guy sitting in the White House. That's next.
Welcome back and take a look at shares of U.S. Steel today. What a drama this has been in the past couple of hours. First, they jumped into the green, as you can see there, on reports that the president might let the Nippon takeover go through after all. Now, it was only a slight increase, not a huge move, but notable nevertheless. Now they're selling off, down about 6.5%, and that's after a brief trading halt. Why? Because the president, in remarks with the Japanese prime minister, now seems to be shooting that report down.
We didn't want to see that leave, and it wouldn't actually leave, but the concept psychologically not good. So they've agreed to invest heavily in U.S. Steel as opposed to own it, and that sounds very exciting. And we're going to meet with Nissan next week, the head of Nissan, very great company, and they'll work out the details.
Of course, a little confusion there. The president did say Nissan. We think he meant to say Nippon based on all of his remarks there, Brian. I'm sure we'll continue to get more clarity from the White House. Usually the market can figure these things out.
Yeah, he clearly meant Nippon. I mean, he said Nissan, but he meant Nippon Steel. That's obvious. I think that the investment versus outright purchase is interesting. So whether or not, you know, there's a buyout of U.S. Steel, which Cleveland, and you got to watch CLF, Cleveland Cliffs, is another player. Your buddy Laurencio Goncalves, the CEO of Cleveland Cliffs, who's come after me a few times, but I think he's a straight shooter. They're involved in this. How this plays out ultimately will not only impact X, meaning U.S. Steel, but also CLF.
Sure, and also our relations with Japan. So in this meeting, there's been discussion from the president where he says, you know, I'd be open to tariffs on Japan, that sort of thing. And everyone said, wait a minute, they're an ally, so what's this all really about? They are also right up your alley talking about more U.S. sales of LNG.
Yeah, and that's it. And the Japanese are here for a reason. Maybe I should stay tonight. I used to be a commodities trader briefly for a Japanese bank, Shogoto Mitsubishi Bank Desk. And knowing what they might be able to do, spend tens of billions of dollars in either LNG, natural gas straight up, steel, whatever it might be, it's really interesting to have one of the world's, they've got a lot of problems in their economy, but they're still a gigantic economy, Kelly.
Energy's a big piece of that. Obviously, the currency is very cheap. Energy's been very expensive, so we could help solve that problem. Wonder if they're doing a state dinner. That would be a good one. That would be a good one to go to, I think.
If anybody wants to take me to dinner, I'm available.
Brian, we'll see you next. After this, more Power Lunch. President Trump announcing some new tax proposals, including one that could close what some call a loophole for owners of professional sports teams. Mike Ozanian is here now to explain. And Mike, some are bringing up Trump's sort of history with the NFL, not even recent history. I'm going way back to the 80s when he tried to buy the Bills and the whole USFL thing, and wondering if this is some kind of retribution.
Well, who knows? But what I can tell you is the effect of this, if it does happen, could be pretty devastating to the value of sports teams, because the way the law is right now is when a business is acquired, and not just a sports team, but many businesses, the purchase price that's allocated to intangible assets. So in the case of a sports franchise, TV contracts, player contracts, sometimes the franchise itself, they're amortized over 15 years. Mm-hmm. Take the Commanders. 1.2 to 1.4 billion of the 6 billion price tag, present value, could have been amortized. Sure. So that's a huge tax break. That creates a loss for the team, and apart from that, the excess losses the team owners could use for their other businesses. So, really? Yeah, so if you're looking at the Commanders, that could have effectively driven down the franchise cost from $6 billion to about $4.75 billion. So you could see where this could have a very bad impact.
Brian, it's practically a bargain.
Well, yeah, practically a bargain. Listen, I wouldn't mind writing off a couple of billion over taxes, but I'd have to, Mike, make a couple of billion, which is not happening. So what does this all mean for valuations? How much of have the tax benefits been baked into these incredibly growing numbers that we see to buy sports teams?
I think they're baked in a lot, Brian. I know somebody who told me that with recent NFL team transactions, take the Buffalo Bills, for example, over 90% of the purchase price was allocated towards intangible assets. I think conservatively, you have to bake in at least 15% as being able to be written off. Because most of these NFL owners, as you know, have outside businesses that are very profitable. So the excess loss of the sports team that you can then pass through to your other businesses can be enormous. There may be some, it depends on the useful life of the asset. If it can be determined that the asset has a useful life that can be determined, you may be able to still amortize or deduct from earnings some of the purchase price, but I think it's going to be very challenging.
Well, you had a number, Mike, of basically how much you think this could haircut team valuations. What is that number?
Yeah, I think it could be up to 20%.
That's a pretty big hit. So
yeah.
This is a sizable one to focus on. How much is the Super Bowl worth to whoever wins it, you think?
Well, I think present terms, very little, because the NFL has very unique economic rules where basically all the ticket money from the Super Bowl and all the postseason games all goes to the NFL. The teams in the playoffs in the NFL, they get some money from, advertising activation, concessions, if it's a home game. Very, very little money. It's great in the out years. In the out years, you get a lot more sponsorship. The Chiefs, since 2021, when they started this great run, their sponsorship revenue is up over 59%.
Wow.
And, let's face it, you want that because the Chiefs are looking for that new stadium or a big renovation, and you want to lock in those sponsors. You want to have that brand out there. You want to get the season ticket base excited. So could help them a lot in the future.
Mike, quickly, do new stadiums matter?
Absolutely, because that really determines the pecking order in the NFL, Brian, because you got to figure over 60% of the revenue is shared equally. So how do you determine really, who's the most valuable and least valuable? It comes from things like those cushy suites, other forms of hospitality at the stadium, being able to have huge partnerships with sponsors. The old stadiums don't really have the capacity to do that. The new stadiums do. And they really have the ability for activation with sponsors, and that really drives the revenue.
I feel like I'm talking to my sister. She does all these activations. I always hear activation. Brian, who are you rooting for? Is it Philly?
Oh, yes. I'm definitely rooting for the Eagles to defeat the Mahomes and Auto, the Kansas City State Farms.
You and Jake and State Farm, I think there's like a beef there we all need to know about. Mike, thank you. Brian, thanks. And that does it for Power Lunch. Closing bell starts right now.
All right, welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make-or-break hour begins with unsettled stocks, with tariffs, inflation, and earnings all pushing and pulling the markets today. We'll ask our experts over this final stretch how to navigate all of it, including Tom Lee. He'll be here at Post 9 momentarily. In the meantime, I'll show you the scorecard here with 60 to go in regulation. It was late morning, really, when that UMich inflation expectations report hit stocks, along with more tariff talk from the White House, some other things going on, too, that we will tell you about. But that's your picture. Former Fed Vice Chair Rich Clarida with us later on how all of this might impact the Fed's road ahead. Amazon, you know by now, big mover today on its guidance and spending plans down some 4%. And more magic from Meta, that stock hitting an all-time high, going for its 15th straight up day. Of course, we'll track it to the finish as well. And Uber is surging after hedge fund manager Bill Ackman reveals a new position in that name. 30 million shares, he says. Started buying it in January as well. Look at that lift, 8.5% highs of the day for Uber. Does take us to our talk of the tape. The markets, according to Tom Lee, that is, FundStrat's managing partner, head of research. He is with me here at Post 9. Welcome back.
Good to see you, Scott.
I said, so as you miss, inflation expectations spiked. You've got more tariff talk from the White House. And then I saw a report, too, from Jake Sherman, Punchbowl News. $4.7 trillion tax plan is what the Republicans are said to be discussing. I thought the market took a little bit of a move lower on that as well, just given where rates are, concerns about the deficit, et cetera. Your thoughts on all three?
Well, you know, it does seem like a pattern in 2025 as markets sort of take a hit on Fridays and maybe panic Monday. So I don't know if that's going to be the case. To me, I think the inflation headlines from UMich they're not great to see, but also I think that they are messed, or there's a political component to this, because if you break that down between Democrats who see 5% inflation and Republicans at 0, the blend is actually pushing this number up. But to me, it just gets messy around elections.
Yeah, but I mean, let's be honest. There are broad concerns about parts of this agenda from this White House, including, I might add, from the Fed, that it could be inflationary. When rates are already more elevated than I think the Fed would like to see. They'd like to be able to cut more, but their hands are tied. And one of the reasons their hands are tied because of tariffs and unknowns about inflation. Fair?
That's fair. I'm not sure the UMich survey reflects their assessment necessarily of the tariffs as much as, let's say, the bond market. And the bond market seems less concerned about it because, as you know, yields have backed off from 4.8 towards 4.5. But you're right. Tariffs are a reason to be uncertain, but so far I think if I looked at how markets reacted, I think they've actually taken them in stride.
I mean, your biggest takeaway thus far, you say, is that the market's proving resilient, which, I mean, let's be honest, too. Since the start of this bull market, it's been one heck of a resilient market. It's been able to deal with almost anything thrown in its face. You've had a couple of panic moments. Monday, off of the tariff news, last August, with the unwind of the carry trade, and then we just continue to set new highs.
That's right. And I think in 2025, a lot of investors thought maybe the playbook would change because we just put 20% years behind us. But I think with January being up 2.7%, and I think these sell-offs being bought, it does feel like the same market that we had last year.
What are you worried about?
Well, I'm worried about sentiment becoming too bullish, but actually
Too bullish?
But it's turned the other way. You know, sentiment actually has weakened pretty meaningfully. And I'd worry about a policy error from the Fed. And as you know, the bond market still thinks there's more than a 20% chance the Fed hikes this year. I think it would be obviously a policy error if they raise rates.
What about a policy error from the White House?
That's also something markets worry about, yes. But so far, I would say that the news that we've seen on tariffs, they've had more bark than bite, meaning they've proven to be opportunities for investors to buy.
What would you buy?
Well, the big news this week in our minds is the ISM moved back above 50. That really does point to earnings dispersion improving. So I like industrials, you know, the financials. I mean, the small caps, which have been, you know, not a great outperformer yet, but we still think small caps are going to do well this year.
And what happens if some of the uncertainty around D.C. and policy has a more negative impact on not only sentiment, but actual transactions? I saw a stat today that M&A is off to an incredibly slow start this year, when part of the narrative coming into this year was animal spirits. Can't tell you how many times I heard that phrase over the last 3, 4, 5 months. And
Yeah.
what if we don't get that?
I mean, it's still too early, right? Because we're only 1 month into the year. The recovery in optimism, both in the NFIB and even the ISMs, I do think it would sort of argue CEO confidence should be better. So I would expect M&A.
We had all but one of the mega caps report. We got to wait a couple more weeks for NVIDIA. What's your takeaway?
Well, it's been a good earnings season so far. The Mag 7 as a group hasn't been great. You know, in fact, they've been a drag on the S&P this year. So part of it is it's telling me I think a lot of good news is baked into some of these names, and especially with CapEx going up. But it doesn't mean I don't think they're market performers. I just think the outperformance this year comes from financial, small caps, industrial.
Canaccord Genuity today on the Mag 7. We think it's fair to say this has been the softest quarter for this group collectively in the last few years. Is that a meaningful softness, that maybe the best times for a while are behind it?
Well, and that's a relative term, right? Because on an absolute basis, these companies are growing far faster than the S&P. But from a, you know, what's priced into the stocks, clearly it wasn't a market surprise. That's why year to date they haven't been great.
But what about you're paying up, you know, in some respects for declining revenue growth, especially in key areas like cloud, for some of these players where that's an essential part of why you were willing to pay up in the first place? Does that matter?
Well, you know, these are secular stories. So to me, you know, stocks might actually underreact to earnings and they might overreact to earnings over time, and you know, they may consolidate for several years. But to me, the key drivers for why you want to own the Mag 7 haven't changed.
Seems like these names have sort of separated themselves from each other. If you look at a chart, for example, of Meta, it's been magnificent. It's like the magnificent one, as some are suggesting today, because it's on a 14-day winning streak, hoping to get 15 today. Julia Borston's covering that for us. This run over the last 2 weeks alone has just been remarkable.
That's right, Scott. The stock extending its gains again today. It's higher for the 15th day in a row and is trading at all-time highs. Meta shares are up 16% in the past month. It is the best performing of the Mag 7 stocks of 2025, and it's up by more than half over the past 12 months. Now, Meta has not had a single negative day since President Trump took office. Just yesterday, we heard CEO Mark Zuckerberg was at the White House to discuss how Meta can help advance tech leadership abroad. And there was another Meta headline today, the information reporting, and we have confirmed that the performance-based job eliminations impacting 5% of Meta employees will begin on Monday. Those job cuts were first announced last month. Scott?
Julia, thank you very much for that. That's Julia Borston. Back to you, Tom. I mean, if anything, this just shows that the monolith is over, at least for the time being, that they have separated themselves from one another. What do you make of that fact? Does it matter for overall market performance?
I think it should be expected. Correlations between stocks have actually fallen to 20-year lows, so I think this is a year of stock picking. So I wouldn't be surprised for the Mag 7 to diverge, but I also think that means investors can find a lot of other names that can outperform this year.
All right, let's bring in Cameron Dawson into the conversation now. She, of course, of New Edge Wealth, here with us at Post 9 as well. It's nice to see you and have you back.
See you.
You've been listening to Tom. What do you make of what he said?
So we do think that this market is very different than last year's market, mostly because of the starting point of where valuations are, the starting point of where positioning is, and the fact that you were seeing much more dispersion under the surface and different leadership. I think it's important to note that tech has been effectively flat for the last 4 months. It's been on the road to nowhere, and that you have seen things like financials start to take on greater leadership. But at the end of the day, we do think tech still has to play ball for the market to continuously make new highs, simply because it's such a big part of the index. So there's a lot of shifting sands, a lot of churn under the surface, and at the end of the day, we've also seen fading momentum on the index level, which just says to us this sideways chop could continue at least in the near term.
Let's hit tech first, since you went there. I mean, it is worth noting, too, it is the only sector over the last 1 month that is in the red. You really need to continue to get a pickup from these other areas of the market. That's why the market sputtered a little bit, right? Tech is flat, and you just haven't had enough buy-in to get that next leg.
And I think the challenge is tech is also the most crowded of the sectors. If you look at those Deutsche Bank sector flows, tech has been the only sector over the last 2 years that has had net new money flow in. You've seen a little bit come into financials over the last few months since the election. So it's a good argument or a good question of, is this market offsides in the fact that it's not prepared for a leadership rotation away from tech, which could suggest that maybe there's some more pain in that churn.
I mean, that's why equal weight S&P is ahead of the S&P year to date.
Yeah.
Right? Because these areas, other than the mega caps, have performed better than those stocks. So what do you make of that? The fact that the tech is the only negative sector over the last month.
Well, I think again it sort of speaks to market resilience, because tech's the biggest sector. It's down 10%. A lot of folks would say that would take the tape down, and instead we're up 3% for January. And, you know, if tech underperforms this year, I'd actually still think it doesn't make a difference. The S&P would still be up more than 10%.
One of the best stats, I think, for the bulls, you know, was towards the argument, Cam, of, well, you can't get any more multiple expansion in this market, right? You're at 22 times. You better have earnings growth that lives up to the hype.
Yeah.
And it appears that it is. I mean, you're 2/3 of the way through earnings season thus far, and we have 15% earnings growth. That is the strongest in 3 quarters. That was at the high side of expectations. That's where you really need to see the proof in the pudding of what's happening in this market.
And the fourth quarter has shown this dynamic of broadening out, and that is expected to continue in 2025. If you look at consensus, 2025 has that equal weight going from 1% growth last year up to 11%. So there is an implicit broadening out that's already baked into consensus numbers. But watch one thing. Yes, fourth quarter earnings came in better than expected, but we've actually seen slight estimate cuts to 2025 and 2026 numbers over the last 2 weeks. It's very slight. It's 1%. So it's nothing to say run for the hills, but watch those estimate revisions, because we think the most important thing for this market is that 12-month forward earnings estimates continue to rise. That has been the underpinning of this rally for the last 2 years. So it is a true imperative that you see that 12-month forward continue to climb.
How do we feel about earnings? That stat that I just told you, right? You really do believe that you need earnings to remain at least this strong, correct?
Yeah. The ISM turning above 50. It's been below 50 for 26 months, the longest stretch since the ISM was created. That leads earnings growth by 4 months. So it's particularly bullish for what I call mid-cap and small-cap earnings. So I think you're going to get the earnings delivery this year. And it's maybe not just the U.S. You know, year-to-date, Germany's outperforming significantly. I mean, Europe looks like it's going to have a great year. So I think that there's plenty of places to find opportunity.
You want to talk mid-cap, small-cap, right? Tom's obviously loved small-cap, made a big call last year, sort of missed the actual return on it, but the direction was right. It didn't have a terrible year. It just didn't match up to what the other major averages did. You like mid over small?
We like mid over small. We continue to see small as struggling with a high bar of expectations. Look at consensus estimates for 2025 earnings. They're set to grow 32%. In a world where interest rates remain elevated, in a world where growth on a nominal basis potentially slows down, and yes, maybe some uplift from interest rate sensitive parts of the market or cyclical parts of the market recovering, we're a little bit less optimistic on using ISM as an indicator because it has been so flawed in the past. But if we think about small caps, we think that the challenge you have is that you could still be in an earnings revision down cycle because estimates are already starting from such a high place.
Do you have a number in your mind, Tom, on what level of rates would be a problem? Again, I threw out the number that was one of the reports I saw, 4.7 trillion would be the reconciliation package number for Republicans on tax cuts. We'll see whether that ends up being the real number, but you're going to be in the ballpark. You have to believe, amid concerns about where the deficit already is and having a backup at the long end of the curve once again because of concerns about funding it.
Yeah, I mean, the level that's going to be a concern for markets is the day the bond market loses confidence. So I don't know what that level is. I know investors don't like it near 5%, but I think one of the things that is helping to contain yields is the idea that this new administration is finding ways for spending, but also finding ways to save money. So I think Doge is actually one way that markets are getting a little more confident about yields maybe having a ceiling.
Well, I mean, they threw out the $2 trillion number at the very beginning. You don't actually think that's a real number, do you?
Well, we'll have to see. I mean, I guess we can sort of measure it with every quarterly refunding, but it does sound like they're finding ways to save money. I don't know what number they're going to achieve, though.
Yeah. The Fed, where does the Fed play in your thinking? A lot of Fed speakers are out now because the blackout is over. They're able to give their perspective, and most of it seems to be we're on hold because we don't know any more than you do about what the impacts of tariffs or a trade war or renewed trade wars is going to be.
We heard from Mester this week, and there seems to be this consternation from the Fed that inflation expectations are at risk of becoming unanchored. Go back to the summer of 2022. Why did the Fed raise 75 basis points? It's because we got a hot University of Michigan consumer inflation expectations number. It ended up getting revised lower, but the point here is that the Fed is concerned that if you see tariffs get pushed through, that it will cause consumers to expect higher inflation. Look at egg prices, look at people at Costco. You still have this notion of inflation that is still simmering in the consumer psyche. So the Fed is concerned about that, which is why they're on hold. But the good news is the job market isn't giving them any reason to say that they need to rush to cut rates. Jobs data today was still strong. You saw the unemployment rate tick down. Wage growth actually ticked up. All suggests that the Fed can remain on hold, prioritize this worry about inflation without the risk that the job market is falling off a cliff.
So Cameron makes a good point, Tom. What about egg prices literally being an existential threat to this ongoing bull market and bull economy? That you have, there's no strategic egg reserve, right? You can't really go and find them somewhere and release all these eggs. And you do have hoarding, as we've seen, of people trying to get their hands on eggs. What happens if that becomes a legitimate issue, where people are saving money to pay for eggs, and they're not spending it where they otherwise would? UMich suggests that sentiment's deteriorating to some degree, unexpectedly, I might add. Are we downplaying the possible impact of all that? I know people laugh, but I mean, I think it's a legit issue.
Yeah, you never know what becomes burned into like sort of people's minds and what exemplifies where they see inflation. But you know, I'd say maybe I'll just hold judgment until next week. We get a CPI report. People are bracing for that seasonal higher upward bias in that number. But if it's a soft number, I think all this talk about inflation pressures are going to abate.
You thinking at all about more of what you said and what the impact is if you are a consumer and you're more worried about putting eggs on your table than you are clothes in your dresser? That's a potential problem.
Well, and we've certainly seen some pull forward of demand as well from tariffs, of people trying to say, let me get ahead of price increases. And that speaks to the psychological component of inflation and why the Fed does care about inflation expectations. We do think that as the Fed is contemplating the risk of higher inflation, as they're thinking about tariffs, the key difference between today and 2018 is that you're starting from a higher inflation level. You're starting after a very scarring inflation period. So they are worried of that pass-through happening at a much more rapid pace versus getting absorbed by companies as it did back in 2018.
I mean, there's the reaction in the stock. We're showing you the Dow for a reason, because I think this is about the lows of the day, down 450. You can blame it on whatever you want. The inflation expectations, the tariff talk, which we're going to get some degree of tariffs, it looks like, next week. Reciprocal tariffs at the very minimum, the president has suggested already today. And then, of course, reports about the reconciliation package, the price of it, these tax cuts and renewing them, and what the impact is going to be on interest rates. Guys, it's good to have you. Thanks for being here. That's Cameron Dawson and Tom Lee. To Christina Partsinevelos now for the biggest names moving into this close. Christina.
Well, Citi analysts are downgrading Nike shares to neutral and slashing their price target to $72 after meeting with Nike CEO. They say core products like Air Jordan 1s are still struggling, and there aren't enough new products to actually fill in the gap. They're expecting this turnaround for the company to be pushed out to 2027 at the earliest, which, according to them, is too long to wait at these valuations. That's why shares are down 3.5%. Expedia shares hitting an all-time high today after posting strong bookings during the holiday quarter and reinstating its dividend. HSBC and Bank of America say this name is a buy, and the stock is up 17% right now. Airbnb shares are also up in sympathy, almost up 2%. Scott?
All right, Christina, thanks. Back to you in a bit. We're just getting started here. Up next, the former Federal Reserve Vice Chair, Rich Clarida, is standing by. We'll find out what he thinks about potential tariffs, what they could mean for the economy and the Fed's next move. It's just after the break. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC. All right, we're back. An unexpected rise in inflation expectations, along with threats of more tariffs weighing on stocks today and potentially making the Fed's rate cut path even more uncertain. For more insight, let's bring in former Federal Reserve Vice Chairman Richard Clarida. He's now PIMCO's Global Economic Advisor. It's always good to catch up with you. Welcome back.
Good to be here.
What'd you make of UMich today?
Not good. Hopefully it's a blip. Look at a number like that and you're thinking it's probably an aberration, but my goodness, not good if it were to continue for sure.
What do you think the Fed's big takeaway? Do you think they were as startled as you appear to be?
Well, I think they would certainly, a line, 1 point does not make a line. And so I think there's time to look at additional data. But certainly, Scott, if we were to get a run of these, it would be quite concerning, I think, to the Fed.
The Fed seems to be confused into, and I don't mean that in a negative, I think generally on what the impact of prospective tariffs are going to be on the economy and how to deal with it. Now, I thought it was very interesting, Mr. Clarida, the commentary from Austin Goolsbee, the Chicago Fed president, this week, where he talked about learning lessons from the pandemic about supply side disruptions causing inflation, not just a demand issue. It almost flies in the face, if you will, of conventional economics, the way that all of you were raised to believe. More demand creates more inflation. Demand gets out of control, inflation goes up.
Yeah.
The pandemic proved otherwise, that it was a mostly supply chain disruptive impact on the inflation picture. Do you think that that's what they're getting at, that they are so mindful now on the impact of cutting off supply chains and what the impact of inflation could be as a result?
Certainly, supply shocks can push up inflation. We saw that in the 70s. We saw it 2 or 3 years ago. I think with regards to tariffs, the real question is going to be, are tariffs a bargaining chip for the White House or a battering ram? There was just news today, for example, that Europe may cut tariffs on U.S. Cars just to avoid the tariffs that we might put. So I think the Fed is not confused as it is. It's very uncertain about the details of the policy. But you are correct, Scott. There will be an adverse supply element to higher tariffs, especially because a lot of goods that we import are capital goods and inputs to production.
I mean, what if they're both? They being tariffs, both a bargaining chip and a battering ram?
Well, yeah, if it ends up being a battering ram that stays in place for a while, then that will then start to show up in the inflation data and potentially also in the production data for sure.
I mean, when I tell you that, the Republicans, according to reports, are eyeing a $4.7 trillion reconciliation package on tax cuts, what's your reaction to that?
Well, I think I've expected that all of the Trump tax cuts would be extended. The question mark is what will be the pay-fors on the other side of that. And from what I can tell, looking at the news coverage, there's no real consensus among Republicans themselves over how much of this to pay for. So obviously, if none of it's paid for, then that puts additional debt in the hands of the Treasury market. But again, like with tariffs, I think the details will be important, and it's just too soon to tell.
I mean, the president himself, though, has suggested that tariffs are going to be the offset. Yeah. Do you not believe that they could be?
Well, certainly they could. Again, that could be one of the approaches that Congress takes to use some tariff or a lot of tariff revenue to offset the cost. So again, that's an additional source of uncertainty that you pointed to.
But I mean, that would suggest, I guess, is implicit in my question, that they would have to be more permanent than not.
Well,
if
sure.
you were going to use those as a primary source of trade-off,
yeah,
there's only one way to go.
I'm not an expert on budget scoring, but you're right. I think
Nor
in
am I,
order
believe
for
me.
that to be offsetting other elements of the package, that there would have to be some assumption about them staying in place and thus not being the bargaining chip that I referred to a moment ago.
When you're thinking about the number of cuts that the Fed can legitimately get to this year, I don't know if your own mind has changed at all, but where are you today on that question?
Well, you know, we came into the year with a baseline of 2 cuts, where the Fed could be on hold. Indeed, our reading of both the December and January Fed meeting is that Chair Powell and the committee wanted to buy time, in part to assess and resolve some of the uncertainty that we've talked about. You know, coming into the year, I think all but one member of the committee thought that at least 1 cut would be appropriate. We heard today, for example, from President Kashkari making a comment along those lines. But we also heard from President Logan, in which I read her remarks to indicate that she could see scenarios where there aren't cuts at all. So again, I think there will be additional cuts, but that's really going to depend on the flow of data for sure.
I thought it was interesting. You know, obviously the president made waves, which he likes to do, in his comments to Davos, where he said he's going to demand, I think he used the word demand, that interest rates move lower. Now, the Treasury Secretary Bessent gave an interview this week in which he suggested they're more in tune with watching the 10-year yield than they are in lowering interest rates, at least demanding that the Fed do something about that. What's your reaction to that?
You know, I applaud the comments by Secretary Bessent, because it reflects a reality that most people don't borrow at the very front end of the yield curve at the federal funds rate. People get 30-year mortgages and they get auto loans, and corporates borrow money. And so I applauded the focus on the part of the Treasury Secretary to that as being, you know, probably the most important interest rate in the economy. And obviously, you know, decisions by the Treasury have a lot to do with that.
Richard, I appreciate your time very much. We'll talk soon.
Thank you.
All right, that's Richard Clarida. Up next, investing beyond equities, Jefferies Wealth Management's Lori Goodman will tell us where she's seeing opportunity right now. Closing bell's coming right back.
Inside Wealth.
Welcome back. Red across the board today, moving lower as well here as we head towards the close. Dow and NASDAQ now negative on the week. Our next guest looking beyond stocks for opportunity. Joining me now, Jefferies Wealth Management's Lori Goodman. It's good to have you.
Hi. Thanks so much for having me.
So alts are really your focus, your wheelhouse. You also say stay liquid, which is interesting because people think of alts as not exactly the most liquid place to be. So reconcile that for me.
That's true. That's true. Well, there's a range of liquidity within alts, right? So if you're thinking about the more liquid end of the spectrum, you can talk about hedge funds. There's definitely liquid places in private credit. There's even some relatively liquid places in infrastructure, going all the way out on the spectrum to private equity, longer duration private credit, et cetera.
What's your favorite area of alts? If you had to pick one, do you have one right now?
No, I don't. I really look at things from a bottom-up perspective. We're trying to find more esoteric strategies. And really, I mean, the topic of the day you've been talking about is what's going on with tariffs and what's it going to mean for inflation. And there's so much uncertainty out there. And so what we're trying to do is we're trying to find those strategies that are going to be insulated from that uncertainty, playing more in niche segments of the market.
I mean, and you think, well, I guess I would say, theoretically, yes, but if I'm going to be investing in private equity, for example, coming into this year, there's so much optimism about deal making and realizations from private equity.
Yes.
But if some of the issue caused by tariffs, that upsets the market, and then there aren't as many deals as one thought there might be, that could have an impact.
That's exactly right. So actually I was just looking at a headline before I walked on here, and it's saying that deal activity was really repressed in January because of all of this uncertainty.
That's exactly right.
And if you have a lot of inflation, there's going to be a continued kicking the can down the road, right? 2024 was the third consecutive year of below average distributions. What happens is this, right? It's LBO is the predominant part of private equity. And leverage is like alcohol. It makes the good better, it makes the bad worse. And so when you have this inflation scares, people don't want to go to market. They want to see inflation and rates come down because they'll get better valuations. So it's something we're really looking at. With all of that said, there are parts of the market that you can play in private equity where you're less beholden to what happens. So if there's areas with secular tailwinds, whether it's cybersecurity or AI or biopharma, where you're finding niche managers where the exit path may be M&A as opposed to IPO, those are going to be somewhat insulated from these dynamics. They're still going to be impacted, no doubt.
I feel like it's two big areas for private equity that, you talk to private equity executives, you hear a lot about data center and private credit, obviously. How do you view those areas?
Sure. I mean, for data centers, a lot of it's going to be wait and see with the ramifications of DeepSeek and how much energy we're going to need. With private credit, it's been an interesting space as well, and it's been going through a lot of change. So if you look at what's happened in the market over the last couple of years, a lot of the large asset managers implemented private credit into their strategy, even if they were traditionally just credit hedge funds or traditionally buyout shops, right? And so they're showing you in some ways that they think that the risk reward there is good if we don't get rates back to zero. At the same time, you have to be careful because the pendulum's swinging, and now you have a lot of assets moving into this space, and so they're going to be competing with each other. You're going to see spreads compress, and also banks. If we have the bank deregulation, you're going to see more competition from banks in this space.
So it was a couple of Mondays ago, the DeepSeek headline, which really caused an earthquake, obviously. Did that sort of form its own cracks in the way you're thinking about data center? I mean, are you being a little more scrutinizing of that investment at this point?
We haven't had much data center exposure in what we're offering in alts for our clients. But I think it's going to be really interesting to see how all of this plays out. On the one hand, the developments should hopefully lead to greater efficiency, and then it can open up a lot of new opportunities in the application space.
I'd love to just get your view. I know we talked the whole segment about alts, but what about stocks? I mean, what about where the markets are? Are you positive on? Are you trying to tell a good story to your clients about where you think the equity markets are going?
Yeah, I mean, look, I think we want think we want to recommend staying diversified because there's a lot of uncertainty right now. It's hard to be a CEO when you don't know what tariffs are going to hit, where they're going to hit, when they're going to hit. So diversification is really the best thing you can do to insulate your portfolio from this uncertainty.
Thanks for being here, Laura. It's good to catch up with you.
Thank you.
That's Laura Goodman, from Jefferies. Up next, we're heading out to New Orleans as that city, as you know, gears up for the Super Bowl this weekend. We'll hear from the CEO of Caesars about betting on the big game. You think there's going to be a little bit of betting? We'll tell you exactly how much next.
Tuyệt vời. Đầu tiên, chúng ta cần nói về DevOps. Hiểu GitLab có nghĩa là hiểu DevOps. Phần lớn quá trình xây dựng một phần mềm tẻ nhạt thực ra là những gì xảy ra sau khi bạn viết mã. Kiểm tra mã đó để đảm bảo mã sẽ hoạt động cho người dùng của bạn, sau đó thực sự đưa mã đó ra thị trường và giám sát mã đó để đảm bảo mã hoạt động tốt, đó là một phần của quy trình. Vì vậy, khi đề cập đến DevOps, có 3 phần chúng ta cần hiểu. Có kỳ hoặc tích hợp liên tục, kiểm tra mã của bạn thường xuyên, CD hoặc triển khai liên tục, triển khai mã của bạn thường xuyên, giám sát hiệu suất ứng dụng, theo dõi hiệu suất ứng dụng của bạn. Vì vậy, hãy tưởng tượng bạn được giao nhiệm vụ viết một tính năng mới, bạn đã hoàn thành xuất sắc công việc, bạn đã mã hóa nó và bây giờ thì sao? Thực sự là còn lại 2 thứ. Bạn cần hợp nhất mã đó vào phần còn lại của cơ sở mã, bao gồm cả việc kiểm tra kỹ mã đó trên một số chiều, đảm bảo bạn không vi phạm bất kỳ điều gì. Thứ hai, bạn cần đẩy cơ sở mã đã cập nhật đó. Cuối cùng, khi nó được đưa ra thị trường, bạn cần đảm bảo rằng nó hoạt động tốt. Một lần nữa, đây là một phần ghi, CD, APM của nó. Về cơ bản đây là DevOps. Và hãy để tôi đặt cái này ra khỏi đó. Khi bạn sử dụng Google DevOps, khi bạn nói chuyện với mọi người về DevOps, có rất nhiều cách hiểu khác nhau về DevOps là gì. Một số người nói một triết lý, một số người nói đó là một chuỗi các công cụ, một quá trình. Nhưng đối với video này, chúng tôi thực sự đang nói về DevOps và cách nó liên quan đến quy trình làm việc và công cụ. Đó là lý do tại sao chúng tôi nghĩ GitLab là một công cụ tuyệt vời cho bất kỳ thứ gì liên quan đến DevOps. Bây giờ, tùy thuộc vào nơi bạn làm việc, giả sử với việc theo dõi sự cố, nơi chúng tôi theo dõi lỗi và yêu cầu của mình, bạn có thể sử dụng Jira. Thứ hai, Asana kiểm soát nguồn, bạn có thể đang lưu trữ mã của mình. Vì vậy, bạn có thể sử dụng GitHub, có thể sử dụng MyBook, bạn có thể sử dụng GitLab, bạn có thể sử dụng thứ gì đó khác. Đối với Key, CD, kiểm tra và khám phá mã của bạn, thành thật mà nói có quá nhiều công cụ mang tên các bạn, nhưng có Key, Jenkins, có Hanna, có Drop, có Argo. Có rất nhiều công cụ thực hiện công việc đó, dành cho tất cả những người đang truy cập. Không, hiện tại tôi không quan tâm đến việc sử dụng công cụ của bạn, nhưng để theo dõi, có những công cụ phổ biến như Datado, Grafana, New Relic và danh sách này vẫn tiếp tục mở rộng. Hầu hết các công ty sử dụng nhiều công cụ để tránh sự ràng buộc của nhà cung cấp. GitLab nhận định rằng bạn nên thực hiện tất cả những điều này trên một nền tảng và hợp nhất ngăn xếp của mình. Theo ý kiến của tôi, GitLab thật tuyệt vời nếu bạn là một công ty khởi nghiệp, nếu bạn là một tổ chức nhỏ hơn hoặc bạn không có nhiều bộ phận chuyển động, bạn không có nhiều tài nguyên. Vì GitLab thực sự tập trung vào việc cung cấp cho bạn mọi thứ bạn cần để bắt đầu. Một lần nữa, bạn có thể sử dụng GitLab để theo dõi vấn đề. Vì vậy, tương tự như Visa, bạn có thể tạo vé và bạn có thể tạo lỗi và bạn có thể sắp xếp và bạn có hồ sơ tồn đọng. Cách tôi luôn sử dụng GitLab chủ yếu là để kiểm soát phiên bản. Bạn có thể sử dụng nó để quản lý kho lưu trữ mã của mình, xử lý việc hợp nhất và thay đổi từ nhóm của bạn, tương tự như GitHub, nhưng tôi luôn thích giao diện người dùng của GitLab qua GitHub. Đó chỉ là sở thích cá nhân. Và hãy nhớ, mã ứng dụng thực tế được đăng trên máy chủ GitLab và các nhà phát triển sẽ lấy các bản sao cục bộ của mã đó vào máy tính xách tay của họ để phát triển các tính năng hoặc lỗi mới. Nhưng điều tôi thích ở GitLab, nó cung cấp một tiện ích để đóng gói và lưu trữ bất kỳ phần phụ thuộc nào mà ứng dụng của bạn dựa vào. Vì vậy, chúng ta đang nói về các gói, sổ đăng ký vùng chứa. Hầu hết các nhóm đều sử dụng trình quản lý gói như NPM. Đối với nhiều ứng dụng quan trọng hơn với các gói lớn hơn, các nhóm sẽ sử dụng thứ gì đó như GitLab để lưu trữ và lưu trữ các gói đó. Bạn có thể làm điều tương tự trên các nền tảng khác, nhưng GitLab là một cửa hàng tổng hợp. CICD, tôi rất thích CICD trên GitLab vì bạn thực sự có thể xây dựng các bước. Bạn có thể tạo tệp YAML và nó thực sự có hình ảnh đẹp mắt khi thấy mọi thứ di chuyển từ trái sang phải nơi nó đang xây dựng, đang thử nghiệm, đang triển khai. Có thể bạn có những môi trường khác nhau, nơi bạn có sân khấu và sản xuất, có lẽ điều gì đó cần phải xảy ra trước khi bạn đi vào sản xuất. Có lẽ bạn muốn thêm một khách bổ sung. Mình đã test rồi, mình nhìn rồi nhấn nút vào prod. GitLab cung cấp cho bạn những loại khả năng đó. Và cuối cùng, bạn có thể thực hiện giám sát. Bây giờ, GitLab, thành thật mà nói, nó không nhất thiết phải có các tính năng tương tự như Datadog hoặc New Relic, nhưng nó có sẵn và đối với hầu hết những người mới bắt đầu, nó cung cấp rất nhiều tính năng để hầu hết mọi người bắt đầu. Một số lưu ý cuối cùng, đối với tôi, GitLab đã thực sự tìm được cách tiếp cận các tổ chức đang cố gắng thực hiện nhiều việc khác nhau nhưng muốn có một số tùy chỉnh đằng sau nó. Và nó mang lại cho họ sự linh hoạt để nói, này, bạn có thể làm mọi thứ trong GitLab. Nó thực sự là một điểm dừng chân cho mọi thứ bạn có thể cần để bắt đầu ứng dụng của mình. Nhưng chúng ta đã bỏ lỡ điều gì? Bạn có những câu hỏi nào? Tôi có hoàn toàn sai không? GitHub có vượt trội hơn GitLab không? Hãy cho tôi biết trong các ý kiến dưới đây. Đó là tất cả những gì tôi có. Công nghệ ra.
Vậy thì làm sao người bình thường giống như em biết được khi nào bán cổ phiếu mình đang ôm và khi nào bán và khi nào ngưng?
Kính thưa quý vị, đây là một câu hỏi rất là nghiêm túc. Tôi phải trả lời một cách rất là nghiêm túc. Thì đây là cái sự sống còn của tất cả những người mua bán thị trường. Không có một cái business nào, không có một quân đội nào, không có một cái tác chiến nào mà khi mà mình quyết định mình bước vô một cái trận đấu mà mình không có điều rút quân. Quý vị nhớ là trong bất cứ một cái tiến trình landing nào, trước khi chúng ta khai quân, khai chiến với bất cứ ai, khai chiến mở open một cái dự án nào, bắt buộc phải có con đường thoát, có nghĩa là exit strategy của chúng ta là cái gì. Nếu nó như vậy chúng ta bán bỏ hay là chúng ta giữ hay là chúng ta bán mức nào phải bán, mức nào phải ra và mức nào phải cut loss. Cũng như là quân đội cũng vậy, khi nào phải rút quân và rút quân bằng đường nào, tất cả cái đó phải có layout trước khi chúng ta bước vô chiến trận, thưa quý vị. Nếu mà bước vô bất cứ một trận chiến nào hay là bước vào bất cứ một cái deal nào mà không có con đường rút quân, quý vị asking for trouble, tức là rất là lớn, rất là nguy hiểm, có thể là tán gia bại sản mà có thể là wipe out toàn bộ cái hệ thống của quý vị. Và điều này đã thường xảy ra. Rất là nhiều người open một cái trade, mua một cổ phiếu, vô mua, đợi đến khi nào bán ra, đợi đến khi nào mà nó xuống thật là thấp rồi mới bán ra. Tại sao? Tại vì khi mà nó lên thật là cao cũng chưa bán quý vị. Tại vì mình không có exit strategy, mình không có plan trước. Mình không nói rằng ok tôi mua cái cổ phiếu đó 10 đô, khi mà nó lên 15 ngày sau tôi bán, hay là 7 ngày sau tôi bán, hay là khi nó hit 45 đồng tôi bán, hay là 35 đồng tôi bán, hay là tới một level mà nó nhấp 4 lần không được tôi ra. Phải có layout rất là rõ ràng, là khi thị trường nó lên tới đó, nó thử 3-4 lần không được thì tôi phải đi ra, chứ tôi không ngồi đó tôi đợi cho đến khi nào mà thử lần thứ 5, thứ 6 nhất quá tam nó đi xuống. Rồi lúc đó rồi tôi hỏi tại sao tôi không bán lúc đó. Cái exit strategy đó là một cái nghệ thuật, mà một nghệ thuật cao cấp. Cũng như là chúng ta đã từng thấy những cái cổ phiếu mình recommend quý vị. Tôi recommend UVXY 9 đô la lên 24 đô la exit, nó lên tới 23-24 đô la. Rồi có nhiều người hỏi tại sao mình có nên đợi nữa hay không, thì tôi cũng không biết trả lời làm sao. Rồi tôi nói nếu quý vị muốn đợi thì đợi, tôi không biết sao. Rồi thì đợi đến 55 cũng không có, thì nó quay đầu xuống, bây giờ xuống còn 13 đô, đúng không? Thì bây giờ tại sao mình 23 đô không bán, bây giờ xuống 13 đô thì lại ngồi đó mình tiếc. Thì tại sao? Tại vì đó thì là mình không có một cái exit strategy, mình không có một cái hệ thống để mà mình chuẩn bị mình đi ra, và điều đó là cái mất mát và thiệt thòi nhất.
NTV Fund là một tài khoản tổng hợp đầu tư cổ phiếu trên thị trường Hoa Kỳ do anh Nguyễn Thanh Vũ, giám đốc điều hành công ty cổ phiếu NTV Financial Group trực tiếp trao đổi. Với chỉ tiêu 30% tiền lời mỗi năm. Quý vị sẽ được chi tiền lời mỗi 3 tháng với số vốn đầu tư tối thiểu 5.000 Mỹ Kim. Quý vị sẽ được công ty bảo đảm 100% không bị mất vốn và có thể rút vốn về bất cứ lúc nào. Xin liên lạc trực tiếp với Trish Thùy Linh tại 949 524 9352 hoặc gọi về công ty 714 251 6036 để tham khảo.
Đó là một chủ đề lâu đời như bản chất của đồng tiền, cuộc đấu tranh không ngừng giữa những người giàu có và những người nghèo khó. Cuộc xung đột này trở nên đặc biệt rõ ràng và nổi bật sau cuộc khủng hoảng tài chính lớn. Mọi người mất tiền nhanh chóng sau mưa thị trường. Hàng triệu người đã mất việc làm và cả nhà cửa của họ. Niềm tin vào phố Wall đã chạm đáy thấp nhất từ trước đến nay trong ký ức của nhiều người. Mọi người được set xuống đường biểu per khắp nơi. Giữa bối cảnh khủng hoảng này, một công ty đã ra mắt một ứng dụng giấy chứng khoán mới, Robinhood, được đặt theo tên của nhân vật truyện cổ tích Anh. Người lấy của người giàu chia cho người nghèo.
Kiếm sĩ giỏi, cung thủ giỏi, chiến binh giỏi. Bạn có đồng ý với tôi không?
Nhưng họ không khởi nghiệp công ty trị giá 5,6 tỷ đô la. Những người này đã làm. Đây là mức định giá sốc cho công ty tài chính với số liệu mơ hồ và nhiều đối thủ. Công ty trẻ này cũng có sai lầm.
Quá tốt để có thể là sự thật.
Vâng, đối với Robinhood, điều có thể đúng. Chúng tôi biết rằng hoạt động này Kênh
bị chỉ trích không chỉ từ các cơ quan quản lý mà còn từ những người bảo vệ quyền lợi người tiêu dùng.
Họ nói rằng họ được truyền cảm hứng từ
cuộc khủng hoảng tài chính và tất cả những thứ đó. Vâng, tên họ đã nhận được một phần lớn
doanh thu từ giao dịch suất cao, gây ra câu hỏi liệu họ có thể xử lý được giờ vàng hay không. Nhưng hãy quay lại thời điểm đầu. Robinhood ngày nay, ứng dụng này được sáng lập bởi đã chán ngán với cách giao dịch hiện tại, hoặc ít nhất là họ biết những người khác cũng chán ngán.
Chúng tôi tập trung vào việc xây dựng trải nghiệm người dùng tuyệt vời. Việc đưa một thứ gì đó như 150 khách hàng vào trong một thời gian ngắn như vậy là điều chưa từng có trong ngành mới.
Chi phí giao dịch đã giảm đáng kể trong 20 năm qua, kể từ khi giao dịch trực tuyến bắt đầu. Tại sao không miễn phí ngay bây giờ? Nếu bạn muốn đầu tư vào thị trường chứng khoán mà không phải trả phí, có một ứng dụng dành cho bạn.
Kể từ khi Robinhood xuất hiện trên cửa hàng ứng dụng, chúng tôi đã giúp khách hàng tiết kiệm được $1.
Hoa hồng, tất cả đều nhằm mục đích ép các ngân hàng phải trả.
Sứ mệnh của Robinhood là dân chủ hóa hệ thống tài chính của Hoa Kỳ.
Nhưng có một điều khác khiến sản phẩm này hoạt động. Chúng tôi đã nghiện điện thoại của mình. Robinhood giúp giao dịch dễ dàng trên thiết bị mà chúng tôi đã nhìn cả ngày. Sự kết hợp tăng trưởng đáng kinh ngạc. Công ty ra mắt vào năm 2013. Chỉ hơn năm sau, họ đã có hàng trăm nghìn người trong danh sách chờ. Ý đầu tháng 2018, họ có 3 triệu khách hàng. Đến cuối năm đó, họ đã tăng gấp đôi con số đó lên 6 triệu người dùng. Được nhiều người tin rằng là công ty được yêu thích trong lĩnh vực công nghệ tài chính. Đây là một công ty mang tính cách mạng.
Điểm thực sự mang tính đột phá của họ là tốc độ di chuyển và mức độ họ đang đẩy mạnh ranh giới. Bạn biết đấy, họ không thể bị loại bỏ vì có điều gì đó trong khả năng tăng gấp đôi liên tục. Khi rõ ràng bạn đang tạo được tiếng vang với người tiêu dùng, và sau đó là tốc độ họ cung cấp các loại khả năng mới. Tôi không nghĩ bất kỳ người đương nhiệm nào
có thể di chuyển nhanh như vậy, nhưng vẫn còn câu hỏi về số tiền thực sự có trong các tài khoản.
Robinhood nhận được nhiều sự chú ý vì sự tăng trưởng của tài khoản thực sự ấn tượng, và mọi thứ tương tự như vậy, nhưng có rất ít tiền ở đó. Với Swap và Merit Trade, chúng tôi có các tài khoản lớn hơn, các tài khoản lên tới hàng trăm nghìn, không phải trung bình, vài nghìn. Đó là lần cuối chúng tôi xem xét Robinhood.
Phân tích của JMP ước tính tài sản trung bình trong các tài khoản Robinhood là từ 1 đến 5 đô la không, so với 100 không đối với Fidelity, 110 không đối với TD Ameritrade và khoảng 240 không đối với Charles Schwab. Robinhood sẽ không tiết lộ giá trị tài khoản khi được CNBC hỏi.
Chúng tôi không biết chính xác quy mô tài khoản ở đâu. Tôi nghi ngờ rằng dựa trên các loại tài khoản, chúng thường là các tài khoản có tài sản thấp hơn, và do đó chúng sẽ ít có lợi nhuận hơn vào thời điểm hiện tại. Nhưng tôi nghĩ có lẽ một trong những điều quan trọng cần nghĩ đến là một tài khoản nhỏ hiện tại có thể là một tài khoản lớn trong tương lai, đặc biệt là nếu bạn đang tiếp cận khách hàng khi họ còn trẻ hoặc mới bắt đầu cuộc sống tài chính.
Họ không chỉ có thể cạnh tranh với các công ty môi giới như TD Ameritrade và Charles Schwab, mà còn có thể thách thức cả các ngân hàng lớn nữa.
Đặc biệt là khi bạn thêm nhiều khả năng và dịch vụ hơn, sau đó phục vụ tiền mặt của tài khoản. Hy vọng bạn có cơ hội cạnh tranh để giành được tỷ lệ phần trăm cao hơn cổ phiếu. Một số công ty lớn hiện đang làm khá tốt.
Ngoài ra còn có các công ty khởi nghiệp khác đang cố gắng tận dụng xu hướng này. Một loạt các ứng dụng hướng đến đầu tư đã xuất hiện.
Given that you have Amazon down 4% today, you have actually a lot of relatively nasty responses to some earnings reports and some work on that the companies missing are getting punished more than usual. In aggregate, we're going to move the chains, and it looks like it'll be okay. But definitely a little bit of a delicate balance that this market is perched on.
All right, Court, tell us about beauty stocks taking a hit.
Yeah, pretty ugly here for the beauty groups here today. So e.l.f. Beauty is really pulling down the entire sector in a big way. It's on pace, e.l.f. at least, for its worst week since August of 2018. Ulta Beauty, that of course sells e.l.f. Beauty products among others, also on pace for its worst week since August. Competitor Coty, worst week since August as well. Estee Lauder, worst since October. So the low-priced, often viral beauty brand, it's cutting its guidance. It's actually pretty rare. It's had a really strong sort of trend here for sales and otherwise, but also missed on profit. It called out seeing a slowdown in its sales in January, and the CEO, Tarang Amin, isn't really worried about bigger issues at e.l.f. Beauty specifically, even though he admitted that recent product launches kind of failed to perform as well as past offerings. Instead, he points to external factors from the slowdown in the beauty category overall after a huge growth rate and slowdown in social commentary around beauty last month, with TikTok users, for instance, focusing more on a possible ban of that social media platform and also focusing on things like LA wildfires. Probably felt more appropriate than putting up beauty tutorials. Makes sense if that is what happened, why you're seeing the broader industry get pulled down if it's more than just an e.l.f. Beauty issue, but definitely something to take note of.
All right, Court, thank you very much for that. Courtney Reagan, Steve Kovac, to you. Many investors doing a double take at Take Two. You see what I did there?
I caught
at Take
on.
Two today. I'm glad. You're quick. You're quick. I appreciate it.
Let me tell you what's
15%.
going on here. Yeah, let me tell you what's going on here, Scott. So last night they reiterated their guidance and the fact that Grand Theft Auto 6, the next in that big franchise, is going to launch this fall. Not a huge surprise there, but it was enough to send shares soaring, especially following pain from so many other gaming companies this earnings season. The big one, of course, was Electronic Arts back in January. They revised their guidance lower after Football Club, that's their soccer game franchise, failed to meet expectations in the December quarter. They had another game called Dragon Age Veilguard that didn't sell well either. And then you had that Roblox guidance disappointing in their earnings yesterday, not to mention Bloomberg reporting it's part of an active SEC investigation. Unclear what that one's about. The company's not responding to requests for comment. And then you had Microsoft. Their gaming revenue was down 7% and gaming hardware revenue down 29%. That, by the way, includes Activision, the big company they bought for $69 billion. Makes all that CapEx spending look kind of silly right now. All those regulatory headaches and so forth they went through. Was it worth it? And in the meantime, we had Bloomberg reporting last year that Take-Two competitors are really just waiting to see what they do with GTA 6, including waiting for them to announce a specific date before launching their own games. The entire industry, Scott, you have wrapped around Grand Theft Auto 6, likely going to be the most valuable or most huge, biggest revenue entertainment property in the history. Scott.
Good stuff. Steve, thank you. Steve Kovac, you heard the 2-minute warning. Throw up shares of Uber, guys, if you could, for me, please. Bill Ackman announcing today on X that he's taken a new position. 30 million shares, $2.2 billion, started buying it in January. What do you make of that?
It's interesting. First of all, I felt as if Uber had really become kind of a consensus favorite last year, especially kind of a hedge fund name. Everyone thought the platform was finally at a point of really kicking off lots of sustainable free cash flow. One thing you could make of it is clearly Bill Ackman doesn't believe that it should be going down every time Elon Musk says robotaxi, which had been going on with Uber, which is crazy that they was considered to be that vulnerable in the near term. That said, 30 million shares or 30.3 million shares since early January. I went back and looked. He's been like 5% of the volume in the stock since that point. Presumably, he's now got a full position because he's now talking about it.
Yeah.
So it's almost like the buying's good, it's a vote of confidence, but it doesn't necessarily mean from here on out it's going to have a lot of legs in terms of more incremental demand for the stock. But it is, kind of interesting, by the way, in the Dow transports, and one of the reasons that I think a lot of the Dow transports have been hanging in there better than some other cyclical parts of the market.
Meta going to be 15 in a row today because it looks like it's going to go green. Finish green, I should say.
Yes.
And that's an all-time high.
It was cheap enough, it was in the right spots, and now it's momentum. I'm just shocked that Palantir's down, 1/3% after going up 34% week to date. That's the other one in that bucket.
All right, great weekend, Mike. Thank you very much. Fellas in the ring, great weekend, everybody, as well. We'll see you on the other side. I'll send it into overtime now with Morgan.
Well, that's the end of regulation. Millrose Properties ringing the closing bell at the New York Stock Exchange. Suit up, doing the honors at the NASDAQ. New inflation, tariff fears, fueling a sell-off. Inflation data, I should say. A sell-off for the week. That's a scorecard on Wall Street, but the action's just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan. John Fort is off today. Well, the Dow falling for a second straight day. The S&P 500 and the NASDAQ both snapping 3-week winning streaks after a higher-than-expected jump in wage growth, weak consumer confidence data, and President Trump promising reciprocal tariffs on some countries as soon as next week. Coming up, former Council of Economic Advisors Chairman Jason Furman on the potential economic fallout from more tariffs. Plus, Palantir is up roughly 40% this week. Palantir co-founder Joe Lonsdale weighs in on the stock's amazing run and where he is putting money to work through his venture fund. But let's bring in Unlimited CEO Bob Elliott and G Squared Private Wealth founder Victoria Green. It's great to have you both here. We had a down day for the major average.